Financial markets in the United States and Canada are closed today, so it's the right time to revise risks and forecasts. Investors are ready for a busy week. Apart from the long-awaited Fed's minutes, market participants will have to assess a bunch of corporate reports from the US retailers and the crucial PCE index. InstaForex experts have already prepared analysis of important events. As usual, let's sum up the results of the previous week. The benchmark stock indexes closed the volatile and the gloomy week mixed. The Dow Jones was the only index to close high on Friday. It grew by 0.39%. The Nasdaq shed 0.58% intraday, and the S&P 500 slumped by 1.26% to close at 4,090 points. Futures on the major stock indexes traded sluggishly in the pre-market, extending the mixed dynamics. The S&P 500 and the Dow Jones dipped by 0.2%. The Nasdaq rebounded marginally by 0.06%. As US exchange floors are closed today, the S&P 500 is expected to trade in the corridor between 4,040 and 4,090 points. Wall Street indexes closed the turbulent week on a pessimistic note. Investors digested a great deal of economic data, proving the resilience of the US economy. A few reports revealed stubborn inflation, the tense labor market, and the robust consumer spending. This gives the US Fed ample leverage to raise borrowing costs. Hence, investors upgraded the ultimate size of interest rates. From now on, market participants are betting on at least 2 more rate hikes and expect the funds rate to peak at 5.3% by July, because the central bank is striving to cool down the economy and curb inflation. Apart from concerns for aggressive monetary tightening, Fed policymaker Michelle Bowman said that the regulator should go ahead with the rate hikes until the visible progress is achieved in its fight against inflation. Richmond Fed Thomas Parkin said that the central bank has to continue rate hikes, though it could be modest increases by 25 basis points. Such hawkish remarks from Fed speakers pushed Treasuries yields up. In turn, this affected the stocks of high-tech giants. Microsoft shares stumbled by 1.6% on Friday, and Nvidia shares dropped by 2.8%, and this put pressure on the S&P 500. Besides, Moderna shares fell by 3.3% after the experimental mRNA 1010 flu vaccine showed dubious trials. Shares of lithium miners Livent Incorporated, Albemarle, and Piedmont Lithium plunged by 10 and 12% due to the fears of lower prices of metal used in the batteries of China's electric vehicles. Tesla shares were most traded among the S&P 500 companies. They rose by 3.1% intraday on Friday, and this week is shorter for the US markets in terms of global events. India will host the first summit of G20 central banks leaders this year on February 22 and 25. The economic calendar reminds us about the PCE index, the Fed's preferable gauge for inflation, the Fed's minutes, and the corporate reports by large retailers. The quarterly results of retailers will change the rally of Wall Street, because investors will get to know the extent of consumer spending and inflation's influence of a company's net profits. One of the signs of the US economic resilience appeared last week, because US retail sales expanded in January to the highest level in the last 2 years. In this context, investors are anticipating reports from retailers. Walmart and Home Depot are due to report on Tuesday. Best Buy and Lowe's will release their reports later in the week. The burning issue for investors is consumer spending amid soaring inflation. Investors are more confident now that the US economy will be able to await a serious downturn. Among other companies to report this week will be chip manufacturer Nvidia, vaccine manufacturer Moderna, and the e-commerce giant eBay. The US dollar is trading water today. It's wavering up and down, having inched down 0.02%. The index is trading at about 103.86, and the intraday corridor for the US dollar index is projected between 103.80 and 104.10. The greenback lost ground on Monday, though it's still close to a 6-month high. The index climbed to 204.67 on a Friday, but it slipped shortly after. The US dollar index has jumped by almost 1.8% this month. It's on track to the first monthly growth since September last year. The data indicates the robust labor market, high consumer prices, steady retail sales, and a rise in factory inflation. This increases the likelihood that the US Fed will have to do a lot to bring inflation down, so interest rates are set to grow. Hawkish comments by the Fed's officials supported the greenback. Still, markets expect the federal funds rate to peak at 5.3% by July. Analysts warn that perhaps the US dollar has exhausted its rally, and the most part of a correctional rally is unfolding right now. The US dollar index could top out at 105 points, and the Fed's minutes, which are due on a Wednesday, could shed light on discussions among officials, but they might be of secondary importance because the meeting was held before significant reports. The PCE index will be published on Friday, and the Fed's inflation barometer is expected to rise by 0.4%, the strongest growth in the last 5 months. The US dollar it gained in a fresh impetus this week. The Canadian dollar is regaining its footing following a sell-off last week. The USD card pair is drifting lower, having slipped by 0.5%. The currency pair is now trading at about 1.3460. The intraday corridor for the instrument is seen between 1.3420 and 1.3540. The Canadian dollar is trading quietly on the holiday-themed market. A recovery in oil prices helps the loonie to recoup some losses. Brent crude grew by 0.6% intraday to trade at $83.61 a barrel, and WTI futures climbed by 0.7%. Both benchmark rates sank by 2% on Friday and closed the week with 4% losses after the US announced expansion in crude and gasoline inventories. Besides, the recovery in demand in China is bullish for oil prices. Analysts predict that China's oil imports will hit record levels in 2023 to meet beyond demand for fuel. At the same time, a potential oil shortage might push prices up to $100 a barrel by the year-end, Goldman Sachs said. OPEC and the International Energy Agency also unveiled their forecast last week to prove robust demand this year. Bitcoin was able to recover following its plunge on Friday. It's now trading again above 24,000, and the token slipped intraday on Monday and rebounded. It's trading at about $24,800 at the time of recording this video. Ethereum, Solana, and Ripple are trading higher. The crypto market has been displaying strong performance and resilience. Bitcoin recovers from losses despite the US dollar's growth. The crypto has been developing a steady rally since early 2023. Technically, Bitcoin is trading sideways between the border from $23,700 and $25,200. However, the technical indicators such as the RSI and MACD are displaying steady divergence, which commonly indicates hesitation among investors. Indeed, investors are cautious about risky bets. If Bitcoin drops below the current support level at $23,750, the next support will be found at $22,850. Alternatively, a rise above $25,200 will open the door to $26,000, and the intraday outlook suggests a flat market between $23,700 and $25,200. InstaForex analysts wish you successful trading. See you online tomorrow.